The challenge for China more recently, at least over the last 18 months, has really been around the deleveraging, the credit slowdown in the broader economy.
That's dead though, isn't it?
Well,
the way they're throwing stimulus at the economy, they're the kitchen sinking this thing.
That's true,
yeah.
and that was one of the reasons why we were tactically bullish late last year. We did have a long position in MSCI China through late in the fourth quarter through the sell-off. Okay. But the disturbing element of that is that it doesn't look as strong as it ought to be, and B, the macro news flow continues to deteriorate. So we're still relatively cautious, and we've actually taken off that long position.
So it's not closed it out. Is what you're saying?
Well, we made money on it, but we've just closed it out.
I mean, China's stimulus is not working.
Well, it is not as effectively as it ought to be. I think they probably need to do even more.
Okay, so what are we talking about? I mean, they've talked about tax cuts. They've talked about ramping up, front-running infrastructure spending as well. They're letting local governments issue more bonds now. I mean, that is going to spike 60%. That kind of paper issuance.
Yeah, certainly that's part of the plan. I think one of the challenges in China is that it's difficult to work out the exact fiscal impulse. Yeah. If you looked at the headline deficit, it sort of moved from, I think the target was sort of 2.6 to 2.8.
Nobody believes it's 2.8 though, right?
No, that's exactly right. they've got other pools of capital which come out of the profits of the SOEs and some of their other reserves, which end up being sort of or become fiscal stimulus. So it's plausible that that's an additional impact.
That's on the fiscal side, Nick. On the monetary side as well, you'd have the central bank, and as Eunice highlighted, they're pledging to further support the slowing economy by spurring loans and lowering borrowing costs. So far, we've seen them inject liquidity, cut down the RRR. But do you think on the absolute benchmark rates as well, they support the economy? Because they've seen credit slow down in the month of Feb, and they don't want that to happen. They want activity to pick up.
Yeah, I think that's right. I think that'll be part of the mechanism. They use lots of different tools, as you know, and it's often quite complex. To be honest, I don't fully understand it myself. I think they deliberately keep it complex, but and there's no sort of official sort of target rate as far as we know. But broadly speaking, I think their intention will be to lower rates.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.